It's also going to cover um, it's also going to cover some more advanced topics. We'll talk about like some patterns that I look for. So yeah, it'll be really exciting. We'll go over some setups you taken this week, and I think it's going to be technical analysis with the idea of like first of all, how do you chart something from start to finish, gather all the key technical levels, and then how do you turn around with that chart and then trade it, right? What can you do with the information that you've just done? So that's the game plan for today. It's going to be a quick one. The reason why I'm going to make it a quick one is because I don't like to sit here and ramble along and make this like, a 20-minute introduction and then have you guys sit around here and not give you all the information concisely. So my idea is just we're going to be done probably by, I always say 30 minutes, maybe a little bit over. Probably, I'm going to assume by around 7:45 we'll be done, which is good. It'll be right on target because Aristotle has a session for tonight at, I believe, 8 o'clock. So we're going to cover technical analysis. We're going to go over everything that I think you guys should know. And then we're going to chart some charts towards the end and go over what I think is some good charts to look at, which is we're probably just going to look at Spire QQQ. But just to get a roll call, is everybody ready in the chat? Can you guys just give me a yes if you're ready to go and you guys can hear me and you can see everything? Can you just put a yes in the chat? All right. Awesome. Cool. Okay. So all right, now there's more people in. Awesome. So awesome. Let's get right to it. So what I want to do now is I want to go over let me ask you guys this. How many of you guys attended the first supply and demand class we had? Did you guys attend this one, or is this the first time? Did you guys attend this one? But yes or no. And you can be honest. I prefer to know because if not many people did, then I'm going to spend more time going to this one. Okay, it's 50-50, but mostly no. Okay, 50-50, but mostly no. So no, it's definitely leaning towards mostly no. There are some yeses, but there are a lot of no's. Okay. So what that means is I'm going to spend some time going over a recap of our first lesson. I'll spend about 15 minutes here, then about 20 minutes in our new lesson. It's important that we go through this too, because I like to get everything kind of fresh in your head. Then we'll go over the good stuff. And look, here's what I think. There are a lot of people in the chat who are have been trading for a long time. And a lot of what I'm going to tell you guys is going to be elementary. But elementary is okay because even to this day, I sometimes still read technical analysis books or watch technical analysis videos, right? It's good to learn something. It's always good to learn something. And it's always good to learn something, even if it's repetitious, because repetitious means it's ingrained in your head, meaning it becomes muscle memory. And that's always a good thing. So even if you guys are here for your second time watching the same thing again, even if it's the same slideshow, we're going to have a new one, right? But if this is your second time here, it's still valuable information because it's just going to ingrain some of the things you already knew. And that's okay because it just builds onto your muscle memory. And muscle memory, as you guys know, a lot of trading is literally like driving a car. Like for me, it's literally like the same thing, like tactical analysis, charting something from start to finish, then going and trading that. It's basically like for me, just like second nature. The more years you trade, the easier it gets to do that. And then the easier it is to sort of find technical setups. And that's kind of how I am. I mean, I've been training for about 5 years now. I'm going on to my 6th year next year. It becomes easier and easier and easier the longer you've been trading. And I think that's a really good concept. So let's dig right into this. How do you trade with support resistance levels? Well, what we're doing is with TA is we're basically just all TA is you're just looking for levels that have been previously respected, right? Because the idea here is you're gonna have a chart that looks like this, right? And you're gonna see, well, there are multiple highs, multiple highs, multiple highs, all in the same vicinity, and that's going to represent a level of resistance. This level of resistance is going to be an area of importance in your chart. The reason why it's important is because if if it breaks above this resistance, you can call it resistance A, it's going to go likely to resistance B. The reason why that they do that is because stocks like to trade in high volume nodes, right? Meaning that when a stock breaks above a high volume node, which is usually a resistance area, it likes to go to that next high volume node, which is usually that next area of resistance, which was another previous area of resistance back, maybe in the past, right? So the idea here is that stocks love to trade in key levels of resistance. And when it breaks above that resistance, it likes to go to that next one, right? And then the same deal with supports, right? When a stock breaks under support, it's likely to go back down to that next support. That's how the market moves. That's just basic market mechanics. Now, it doesn't guarantee that it's going to go to that next resistance, but when a stock clears that next resistance, it's more likely to go than it is to not go. And that's the general premise behind how traders trade. And that's the premise of how we trade a break and retest. That's the premise of pretty much everything we do in the market. Now, you guys have seen it many times before. Just because a stock clears resistance doesn't mean it's going to go, but it means it can go, right? So when a stock clears above a resistance here, right, at this point in time, it's either going to go or it's going to fade and go back down to its lows. And this creates an entry point, right? When a stock clears a level, it creates an entry point. And an entry point means we have a defined risk and we have defined entry and we have defined targets. And that is the beauty behind supply and demand, because it gives us the ability to find entry points and find levels of interest, which we could use to trade and encapsulate moves. That is all we're looking for. So if you were to dig deeper into this, why do levels matter? You guys know this already. We went over this before, but they represent retail entries and institutional entries. So let's just say you have a stock, right? Let's just say you have Apple 140, and this is a huge level on Apple. You know that if it clears this 140 level, it's very likely to result in a lot of retail traders entering the market, right? New retail traders entering the market in the stock, and then institutional traders will also enter the market. And the reason why they do that is because most people, right, the most important indicator in the market is not your RSI, is not your MACD. RSI, these important stuff, they're good to know, right? They're good to see, to help you, right? To complement your TA. But the most important things in the market, the most important indicator is going to be your basic support resistance level, or your basic level, your basic macro support and resistance areas on your chart. And the reason why they matter is because we all trade with it. We all look to see, well, we know that last time Apple broke 140, it resulted in a $10 move to the upside. Well, if that's the case, then if Apple breaks 140 again, I'm probably going to also look for an upside move, right? Just because it worked previously doesn't mean it's going to work again, but it is more likely to work than it is not to work. And that is why we trade with these levels. It helps us determine where buyers or sellers may be sitting, and two, what may happen next if this level is broken. And that's the important part. A lot of times, the biggest mistake, honestly, the biggest mistake I see new traders making, I've been trading for about 5 years now. I'm going on my 6th year. I've hit multiple 6-figure profits. I'm near 7 figures in total profit, right? I'm literally very close to 7 figures in profit. And the only reason I'm there is because I realized something. I realized that what I was doing wrong was I was not trading with freaking key levels. I would come in and I would look for RSI bounces, or I would look for maybe an AEMA bounce, right? Or maybe I would look for something like that. And I realized something. I realized that even if let's just say, right, even if I am watching a stock and it's approaching a very key level, maybe this is Apple 140, and it's approaching that 140 level, even if I buy calls here and I lose in this trade, I at least know where I can enter and where I would exit if this trade goes south. I know that if I'm getting in here at 140, I know that my stop loss is probably going to be around 139.50. I'm risking 50 cents here. So even if I lose in this trade, I know exactly what happened, right? Whereas if you're taking, a random trade, right, a random trade throughout the day, a random breakout or something that has no key level, attached to it, right? What are you doing? What is the strategy? What is the system, right? Sure, maybe there's something else there. Maybe there is a Fibonacci retracement. Maybe there's something else that is there to help support the trade. But the biggest and most important thing that traders do incorrectly is they're not trading with these key levels. In fact, they're trading in between these key levels. And when you trade in between key levels, nobody in their right mind has an idea of where the stock is going to go when it's trading anywhere in between these two levels. Nobody knows, right? The only thing we do know is that this area is going to act as a key level of selling, and this area is going to act as a key area of buying. Until it is broken, it is support, and when it breaks, it is now resistance. And that's the whole basis of why levels matter and why we do what we do. And that's the whole basis of how we trade. So key metrics. People talk about the difference between support and demand and supply and resistance. And it's the same thing. These are the same things. They're the same things. They're the same things. They're the same things. It doesn't really matter. You may have a chart that looks like this. We may have a chart that I'll show you guys real charts in a minute. But we may have a chart that looks like this, right? And you can come in here and you'd say, okay, well, yeah, that's clearly a level of. Oops, let me draw this a bit better. That's a level of resistance, right? You might say, yeah, that's clear, right? Because you can see wick 1, wick 2, wick 3, that's level resistance. Maybe you come in and you say, well, how about this? There's also a level of resistance here, right? That also would be a level of resistance because there's multiple wicks, at least 2 wicks in the same vicinity, right? The same off the same linear line in your chart, right? Align your chart. And you would be right? These are two different lines in your chart, but notice how they're very close to each other. And typically, if they're within a dollar or two distance between their two zones or two lines, what you're going to do is create a zone, and this zone is going to be known as a resistance, right? This is going to be a resistance or a supply. A supply is a zone of resistance. A resistance is just one line in your chart. A supply is just a zone in your chart, right? That's all it is. There's nothing else to it. That's literally all it is. Support is the same thing, right? You may have a stock that comes down and bounces off a few areas, but this idea here is it's still all within the same vicinity. And that whole zone over there is going to be known as your demand. And that's all we're doing. All we're going to be doing is we're going to be sitting on these daily, 4-hour, and hourly timeframes and charting the heck out of them to see where these pivot points are, where these areas of interest are on the chart. All we're looking for, the biggest key, is to look for areas of interest and chart them so that we can trade with them going forward. That's the whole idea and premise behind supply and demand. Don't want to go over this. Don't want to go over this either. Okay. This is the most important part of today, and then we're going to go over today's lesson. Charting mechanics. Look for areas of clear price interest. 2 to 3 wicks is the general requirement for a support or resistance line. That's the requirement. The second requirement, this is requirement 1, right? So this would mean that if any of these things if anything in this zone, if this is given to us, it's resistance or support. The second thing that we can look for is known as a parabolic move system. I don't want to go over this right now. I'll go over it in a little bit, but the idea is that a parabolic move system is not it's not the same as thing 1. Thing 1 is basically you're looking for at least 2 different lines in your chart. This would be known as resistance, right? If you see this in the 4-hour time frame, the daily time frame, you know that this is resistance. And you know, well, can you buy calls in resistance? Hell no. But you can buy calls if we see this happen, right? If we see maybe a potential break of that resistance, and then we're coming back into it, flagging into it, then we can buy calls, right? That's the idea of using those 2 different wicks, right, to define a resistance. Now, a parabolic move system is a little bit different. Basically, this would imply that anytime you see a stock push up, right, or anything happens, and you see an aggressive move down, even though there's only one line here, this would be known as a parabolic move. When a stock makes a parabolic move, there typically are a lot of pending orders still sitting here. I usually say it has to be within a few months. This is a little more complicated, but the idea is that when you see an aggressive move happen, even if it's like a flat move, if the stock is like, for example, it's doing this, right? Let's just say the stock is trading sideways for a while, and then all of a sudden it wicks down like this, right? Well, this is going to create a very big pocket of supply. So next time we come back into it, we can look for shorts in there. And the reason why we do that is because you typically have a lot of pending orders still sitting there before that aggressive move that never got filled. So that's a parabolic move system. But the biggest thing, the most important part of this slideshow is to look at thing 1. Thing 1 is the idea of looking for clear price interest with 2 or 3 wicks in the general vicinity. And that's the whole idea here. The big key word is price interest. What the hell does that mean? Price interest means this. Price interest means go to your chart, right? Go to your chart, maybe this IWM, and look to see where is their price interest. Well, I can come here on the 4-hour time frame, and this is what we'll go into in a second, but I'm just going to show you here what price interest really is. I can come in here and I can say, well, where's the price interest? The price interest occurs off of the wicks, right? Off of the wicks. You can see here, well, we have a wick over here at 170. We have a wick over here at 170. We have a wick over here at 170. And notice that we have actually, right, a few other wicks over here, maybe around this 169 area or 169.50 area over here. And this is going to create not just one line in your chart, it's going to create a zone of interest, right? Otherwise known as a demand. So what I'm going to do here is I'm going to create a zone around this box, right? A zone around this whole a box around the zone. And this is going to be my demand. So now I know that, for example, I know that if what's it called? If IWM breaks below this box, right? My box over here, my demand, that I can look for shorts. The reason why I know that is because it's a clear price interest. And if we lose this level, right, because there's multiple wicks off that level, if we lose this level, then we're probably going to head back down to the next area of support, which is back down here at 162.50. And you can see here, I have no idea what IWM even did because I don't even trade the stock. But if I were to let it go out and see what ended up happening, you'd see I went to the exact level. I almost went to the exact level that it came down to do previously. This is how the market works. The market loves trading with key levels. Understand that, and you understand half of trading, right? You literally understand half of trading. If you understand that the market loves to trade to key levels and magnets toward them, gravitates towards them, you're going to have a far better experience when it comes to trading. So if you go to the 4-hour time frame now on IWM, you can see, well, where else is there price interest? Well, you know there's price interest here, right? You know that if IWM is pushing into excuse me, 176.20, that it's going to be a potential supply area for IWM. And there's two scenarios here, right? What are the scenarios here when a stock hits a clear price interest? You see this in Yoas's price interest because you see all the wicks, you see multiple wicks, 3 wicks, and also you could argue that this is known as a parabolic move. Why is it a parabolic move? It's a parabolic move because you see this. You see a stock is over here, and you see aggressive trend down. This is not only a parabolic, not only a price interest, right, where there's multiple wicks off the level, it's also a parabolic move because you see a very aggressive downward move, resulting in an unfilled order sitting there. So this is going to be both a what's it called, a supply based upon requirement 1, but it's also going to be supply based upon requirement 2. This is going to be an incredibly strong level to look out for on WM. Now, what I'm going to do here is draw a zone, right? I'm going to make a zone between the highs of these wicks and the highs of these wicks, right? And that's going to create a pocket of supply on IWM, and this would be another area of supply to watch here, right? And does this make sense? Because does this starting to kind of click a little bit? You guys can kind of see what we're looking for and why we look for it. Does it kind of make sense? I'm talking so fast that my voice is starting to hurt. I'm like a crackhead. Okay, let's get back into it. All right. All right. I need to slow down. So, okay. I showed you guys this before. I know this is redundant for you guys, for people who've seen the slideshow before, but this is what we're looking for, right? We're looking for price interest, right? Look at the price. Look at this, right? Just look at this. Just look how beautiful it comes right into it. Big move down, parabolic move, comes right into it. And what do you know? It acts as an area of price interest. Now, not only is it's still a resistance because of the parabolic move from the move before, but it's also going to be a level of resistance because it's now respected it. We break above it, we see a big trend move higher. We come back into it, it bases for a little bit, it acts as an area of support, but then what do you know? It breaks down, retests it, big move lower. Levels matter, right? And if you understand that all we're looking for are levels where there's clear wicking, right? Clear wicking, then you're going to have a much better time trading. The second thing we look for are things called psychological levels, right? So if we were to come in back in IWM, you're going to notice that the way that we trade, the way that I love trading is I love trading with psych levels. What does that mean? That means basically, if I see level, it's like 169.80. Well, I know 170 is the level I'm going to watch. All right, 170 is the level I'm going to watch because that's a psychological level. And if I come here, I'm saying, well, the supply is at 176.20. I'm going to adjust the supply and make it 176 because that is how market loves trading with key levels. In fact, if you were to go back to the 15-minute time frame, and I'm just going to guess over here, and I could look like a buffoon if I zoom out, I'm just going to guess that 176 acted as a big level of resistance. So you can go over here, we're going to use a replay mode. I'm going to see what happened here, 176. Did 176 act as a resistance, right? You know this whole zone is supply, but did 176 in particular act as resistance? And you can see it did, right? Look how the stock is interacting with this level, right? Comes into it, fails it, comes into it, just closes above it, but fails it again, and finally breaks out above it. And the wick is starting right at 176. You know that 176 is that pivot, right? You know that psychological levels matter more than anything else. Now, granted, I'm going to include the whole zone, right? I'm going to make it the whole zone. So if I see the zone is between 176 and 177.30, well, that's the whole supply. And I'm not going to just make it. I'm not going to come in here and say, well, the level is 176. Well, I'm going to come in and say the whole zone is here to here, right? But the most important level is going to be the 176. Now, would it mean I would buy calls if you broke above 176? I would want to see it break above 177 now, right? 177 is the other psychological level, and that probably would be what I would focus on, right? You could see why we would do these things, right? We are adjusting for whole numbers, we're adjusting for psychological levels, and we're realizing when these levels need to be adjusted. You can see here, it says 177.19. I don't like that, right? I'm gonna make it 177 because it has to be, for me, I prefer it to be whole numbers because these are how things are traded, right? If that makes sense. If you were to come in and you wanted to sell, if you called your broker, let's just say you called your broker and you said, well, I have 40 million shares I have 10 million shares of IWM. I want you to get me out. They're going to say, well, what price do you want to get out at? Well, you're going to come in, you're going to say, well, I want to be out at 176.33. Is that what you're going to say? Probably not. You're going to say, I want to be out at 177, or I want to be out at 177.50, or I want to be out at 180, right? You're going to use whole numbers because that's usually what people do. So whole numbers matter a lot, matter more than anything. So always adjust your levels to whole numbers if you can, right? If you can. So going back to what we have here, I don't want to do any more of this. I want to go to today's lesson because we're going to spend way too much time on this. Let's go to technical analysis refresher. So there are three components of a profitable trader, and I kind of went into this already, and I'm going to probably sound redundant, but it's important to understand that in order to be a profitable trader, you have to understand how to conduct, how to draw on a chart, how to chart something and find all those key levels, right? You need to understand that. The second thing is reading price action. We're not getting to that today. That's something that's much deeper and more advanced. Risk system. We go over this every day. We do it every day in live voice. We do it every morning in live trading. We talk about how to manage risk. I think many of you guys know how to manage risk a lot better than you think because you guys see how we do it on live trading every day. But this is where I want to get into today's lesson, and this is where it gets really important. When you chart something, you need to have a systematic approach. You guys know based on the previous slides, maybe based on previous lessons, the approach. We're looking for either this. We're looking for either go back. We're looking for either one or two of the charting mechanics. We're looking for either price interest or we're looking for a parabolic move. But how do you actually approach it, right? What do you do? What do you do when you jump into a chart? Well, this is where we're getting into today's lesson, and it's going to be a top-down analysis. So what we're going to do is we're going to start off on a larger time frame. And granted, I want to say something. This is like my disclosure. This is my approach. It doesn't mean it's the best approach. I'm not the best trader, but this is what I've done, and this is what's worked for me. My approach is a four-pronged approach. I'm going to start off on the daily. I'm going to go to the 4-hour, then I go to the hourly, then I jump to that 15-minute time frame. And if and by doing this, I'm adjusting for all my key levels. And not only that, I'm finding the big levels in a larger picture, then I'm moving down and I'm adjusting these levels as I move forward. So what I want to do is I want to actually go into some charts with you guys and do this from start to finish. Are you guys understanding this so much so far? I'm reading the chat. What is going on? People are talking about football right now. I'm moving fast. Time is short. Yeah, I'm moving fast. I know I move fast. I move fast. Okay, cool. So everyone understands. So we find these big levels and we do it by starting off on a larger time frame, then we move to smaller time frames. And a big mistake that people make is what they'll do is they'll stick to smaller time frames only, and then they'll miss out on a larger picture. So what I want to do is I actually want to start off on Amazon. And the reason why I want to start off on Amazon is because we traded Amazon like 4 or 5 different times this week. And I want you guys to see something. I want you to see something. I want to reset this chart. First of all, let's get a glimpse of the levels here. We have 140, we have 135, we have 132, we have 123, and 117. Those are the levels we have on our chart. What I want to do is I want to reset this. I want to go to the daily time frame. The indicator that I love the most, the indicator that can be, I talk a lot of bad stuff about indicators, but indicators can be good. And the biggest and most important indicator you can use is the 200 SMA or the 100 SMA, daily time frame. These are very critical indicators that matter a lot. So you want to add something, that's one to add. Now, on Amazon here, let's do a review. Let's do a chart on this. So let's actually look at this and see what's happening here. Okay, well, you can see here, we have a clear level of resistance here at what level? Around 146. And the reason why I say 146 is because we have wick 1 and wick 2. Key resistance, very important high in the chart that I notice here. What else do I notice? Well, I can find out that we have some other levels of resistance if I move down. I can see here we have a other key resistance here around 135. Why does 135 matter? 135 matters because it's the start of the gap fill. It's the wick over here. It's the wick, the wicking action. There's little wicks over here that matter. And you can also see wick over here and wick over here. 135 matters. And notice that all of my levels in the daily time frame are psychological levels. 146 and 135. These are levels that matter, right? You can see that every time we interact with these levels, we see big reactions, either the upside or the downside. Above it, big push higher. Below it, wick, big move down, right? Into it, resistance, big move down. This is a very key level of resistance that really matters on the chart. So I'm going to have that as a key level. Now, the next level I see here of importance is going to be around 120, right? 120 of support. And the reason why 120 matters is because, again, you can see we wick 1, wick 2, and wick 3, right? These are the levels I'm seeing. Now, I don't really see much else here on the daily time frame. And in general, you're going to find out that most times you chart something, you're only going to find a couple levels in the daily time frame. You're not intended to find a bajillion levels on the daily time frame, and you don't want to zoom too deeply in on the daily time frame, because what we're going to do is we're going to shift over from the daily to the 4-hour, and from the 4-hour to the hourly, and the hourly to the 15-minute. So we're going to get we're going to go smaller and more granular in this data, because in every daily candle there's multiple 4-hour candles, right? And in every 4-hour candle there's 4 hourly candles, and in every hourly candle there's 4 15-minute candles. So there's going to be we're going to get more granular, we're going to see more data as we zoom in. So I don't want to come in here and start charting, well, there's a level here and a level here and a level here, right? I don't want to do that yet, right? I want to just chart the macro levels and get a real picture on the daily time frame, real zoomed out picture of the daily time frame. And that's why I'm sticking to just 3 different levels here. And you can see these are the levels that really matter. I can come in here and put on a magnifying glass and maybe find some levels here at 130, but I'm not going to do that. I just want to stick to the key levels here in the daily. And then what I can do is jump to that 4-hour time frame, and this is where I'm going to find some of those other levels that may matter on a smaller scale. So let's zoom in here and let's find what else is going on here in the 4-hour time frame. So we see the daily. The daily is clearly bullish, right? It's bullish. Why? It's bullish because it held 120. It's bullish because we came into 120 and we held 120 and we held the 200 SMA. Bullish. 4-hour time frame. Let's zoom in here. And let's come back. Let's reset this chart back to when we started trading it. We started trading this back around this 132 area, around post earnings when we started trading it this week. And the reason why I'm using Amazon as a case example is because we traded it 3 times this week on live trading. So if you're to zoom out here, let's see what else we have. Well, in Amazon, we have a few other levels that matter. We have a level here. It's around 120, around 123 to 124. And you could see that, technically speaking, Amazon Amazon was it was bouncing off support, but this 123, 124 was big supply. And the fact that it reclaimed the supply, I mean, initially, right? I would have never taken shorts off 123, 124. I wouldn't have done that because, in my opinion, it was still bouncing off a 200 SMA and bouncing off a big demand off 120, right? But you can see that 124, 123 was a big supply. And if we break above it, we're very likely going to head to that next area of supply, which is 135, right? And you can see that very visually. You can see that there's nothing really in between here that I would have on the 4-hour time frame. Maybe I would say there's one level here that I'm missing. The one level I'm missing here in the 4-hour time frame would be that 128. And the reason why 128 matters is because you can see I do see some wicking. Right? I see some wicks over here. I see some wicks over here, and over here, and some general price interest. So I'm going to add 128. But now I know, right? And I can see this very easily on the 4-hour time frame, on the daily and 4-hour time frame. My main focus right now is going to be to look for a call entry, right? Either above 132, because above 132 is going to send us 135, or above 135, because if we get above 135, it's going to send us to where? That next area of resistance, which is around 140, right? And the reason why I'm saying 140 is a key level is because you can see, right? Look at 140. Look at the exact wickage or wicking that we have off our key levels, right? You can see, look, multiple wick again, 1, 2, 3, 4, right? 4 different wicks off one key area. That's going to be known as a resistance. So now I know, and it's also a psychological level. So we have 140, 135, 132. So what can I do now, or what can I do with this data? Well, I could do absolutely nothing because I have to go to the hourly time frame and I have to confirm, are these levels right? What else can I look for here? Oh, okay. Well, I see something, right? I see that technically 135. That's right. That's cool and all, but I have to make some adjustments here because look at this. This is not 135. This is 134.50. This is 134.50. So I have to come in here and I have to say, well, you know what? I can't buy calls until we get above this whole zone, right? Until we get above the whole zone. And if we start approaching the zone, right, then I can't buy calls until we see this. A break and retest. So that's what I'm looking for on Amazon. I could look for this. I could look for this though. I could look for us to clear above this 132 for a move higher back at 134.50. Right? I could look for that. But the idea here is that you can see very, very easily. You can see how easy. No, I shouldn't say easy, but how much of a more fun experience it's going to be to trade this chart now that we have these levels. Now I'm going to go to the 15-minute time frame. I'm going to make any needed adjustments, and I can see here. Well, what do I want to see, right? Well, I want to see, do we have any other levels that I need to know about? Well, I see something here. I see 133, right? I see 133 as a minor resistance. This is known as a minor resistance. This is not going to be a very key level. This is not going to be a macro level like 135 or 132. It's going to be known as a minor resistance. So I know that if Amazon breaks above 132, we're probably going to head to 133. We may see a little bit of resistance at 133. It might not be a massive sell-off, but it may be a little bit of resistance. So if we break above 132, I can look for a call entry into 133, possibly more. But let's see. And we can kind of replay it and see what ended up happening, right? It failed off that exact level. It broke above it here. And at this point, you can see, look at it, right? It comes right into 133. And what happens, right? You know that if we were in calls here on this retest over 132, we're getting the heck out of 133. Look at that, right? And if you want to re-enter now, we can only re-enter above 133 because that would be known as that next key level to watch out for, right? So this is what we're doing. What ended up happening, I believe, was it ended up going that next day, that very next day, I believe. If we were to see here what ended up happening, I think it did go eventually, a little choppy, but eventually did go. And this is where we got in our main entry in Amazon above 135, where you can see huge breakout, retest 135, big move higher. And the reason why this was so important was because it wasn't, this 133 level was important, but it wasn't a macro level. It was a minor level because it was discovered or found in the 15-minute time frame. Macro levels are going to be found in the 4-hour daily. So you know that if we see a breakout over 135, it's very likely to be a bigger breakout because it's a macro breakout. Now let me zoom out for a second. I want to show you guys something else. Before I show you AMD, I want to show you Microsoft, another version of a macro breakout. Well, let's look here. Let's reset this chart. This is a chart that most people were watching on what's it called, on Friday. Is this 352 level. I believe Mike and Felony are both watching this level. I didn't even notice this until they pointed it out. Then I looked at it and said, "Oh, that looks pretty good." And why does it look good? Well, look at this. Look at this, right? Look how clear this 352 level is on Microsoft. Right? You can see here. Let me adjust it properly. We can look at it and zoom in here. Look at 352, right? You can see wick 1, wick 2, wick 3, right? And you know that if we get above 352 and hold above it, right? See a real base above it, where are we headed in the daily? Headed to 360. The next area of resistance, right? This is what we're looking for. We're looking to see where we find these big macro levels of resistance, and all we're doing is playing in between those zones. So let's go now to the 4-hour time frame. And in this case here, you can see, well, look at this. Look how beautiful we are supported right here at 352. Now, if I notice the wick over here popped up to 352.30, right? I'm going to make that adjustment. But here you can see it's almost perfectly at my level. So I'm going to keep it exactly at that level. Let's go to the hourly time frame. Do you see anything else here? Well, nothing else, right? Because I know that my exact level is 352. So if we get above it, I'm going to look for a call entry, right? That's all I'm going to look for. And you can see, look how respected it is intraday, right? Look how respected it is intraday. And now this is important too. Like why would I not be looking for rejects here, right? This is a level of support or resistance. Why would I not be looking to go short off this key resistance? Well, look at the overall trend. The overall trend, the overall structure is clearly bullish. We're looking for pullbacks, right? Looking for pullback entries. This is still a very strong stock. So there's absolutely no reason to short it. The only reason I would go short is if we lost a key structure, which would be around 340. If we lost 340, then I could go short, right? And that's the level to go short at because this is a key structure. If we lose 340, we probably get sent back that next structure around 320, 325. This is what we're doing. As traders, all we're doing is finding these areas where there is clean and clear price interest and trading with them on our docket, right? Now, if I were to just tell you guys that the only levels that matter are daily, 4-hour, hourly, 15-minute level timeframes, I would be lying because there's one other component that we didn't talk about. It's those minor levels. So minor levels we kind of introduced was that 15-minute time frame, right? 15-minute time frame are minor levels. But we also have a series of 4 other data points that matter. We have pre-market high, pre-market low, previous day high, and previous day low. These are known as minor levels. These are levels that we could use intraday as support resistance, but they're not going to be major areas or macro areas of support resistance. They're just going to be smaller areas in the chart that may result in some buying pressure or selling pressure. So keep that in mind. Understand that we're using these daily, 4-hour, hourly timeframes to chart. We're also going to be using the pre-market levels and pre-market low and previous day high and previous day low as also important pivots. Even though they may not be as strong, they're still going to be important pivots. You can think of these guys as like the Marvel superhero type strength, and these guys are kind of like your I have no good I have really no good sort of way to put that. But these are your superheroes, and these are your smaller levels. They're kind of like your local gym guys, and these are your superheroes. No real good anecdote there. But the idea here is that minor levels are going to be smaller pre-market levels and previous high of day, previous low of day, and your big levels are going to be obviously your daily levels, 4-hour levels. You're going to sometimes notice, though, that you're going to see confluence between these zones. So sometimes you may notice, let's just say 256 is a very key supply on Tesla. I mean, the reason why you know it's supply is because you can see that it is an area where we've seen many failures off of, lots of price interest. So you may notice that maybe this is the previous day high also lining up at 256. And what that's going to do is it's going to make it an even stronger level. So now you have 2 reasons for this to be a key level. You have a key level because it's a 4-hour time frame, but it's also now a key level because it's a pre-market high or pre-market low or a previous day high, right? So you can oftentimes line up some of the same things that are in your minor levels with your big levels, right? You're going to see that happen sometimes because it does oftentimes happen. So the key is to have a top-down approach where you're not just slamming key levels where there are wicks, but you're also analyzing the overall structure. Notice how we analyze Microsoft. Notice how we looked at this chart and said, well, this is clearly bullish. Why is it bullish? It broke above 340. It held that structure. It's making higher highs. It's making higher highs. It's not putting in lower lows. If it put in a lower low, which would look like this, then that would be bearish, right? Then this would be the start of cracks in the foundation, in which case we can look for shorts to move down, right? Just like we see here in Tesla, right? Look at Tesla. What happened here in Tesla? You can see here, Tesla was not bearish until it lost this level. This is the start in the crack of the Crackwitz foundation, right? It's now making a lower low over here, right? And by making a lower low, it's now shifted its sentiment to be bearish on the 4-hour time frame, in which we're going to look for shorts. Whereas if you go to a chart like Microsoft, why go short, right? It's pushing higher highs, and it's not pushing those lower lows. It's not making lower lows. Therefore, we are looking for continuation to the upside on a name like this. Very important to look at the overall structure and analyze what it is doing. Look at Amazon. Why did we buy calls every single day this week on Amazon, or almost every day? And why did we not short these resistances? Well, the reason why we didn't short these supplies is because we knew it was a strong structure, and all we're looking for are break and retest these supplies for a move higher, right? That's a general premise. SPY. Why did I not go short once this week? Actually, it's a lie. I went short once this week on Wednesday, made a small little bit of profit, but I didn't go short any other day this week. And the reason why was because look what SPY did. It reclaimed a lower low, right? This was a lower low formed, and we reclaimed that 420 level. As soon as we reclaimed 420, I shifted my sentiment severely. And I knew that if we got above 420, we would see it push higher, right? So this is all we're doing, is we're looking to find I'm talking way too fast. As we're looking to find not only where these key levels of support or resistance are, we're also looking to find what the overall structure is and what it's forming. In this case, on SPY, yes, it made sense to go short, right? Maybe at 414 or maybe at 420, it made sense to go short. But as soon as we clear these lower lows and reclaim that lower low, and it's now forming a lower high, or sorry, a higher high, well, we know at that point it's shifting sentiment, right? In which case we just look for continuations to the upside. Now, very important, now that we're at this pivot, right? This massive pivot at 439, what do? Well, we just have to watch and wait. We have to look for either pullbacks into 428 for a long entry, or we have to look for a break and retest of these highs for a push higher. And that's all we're going to do now, is just wait to see how we react to this next pivot. But the general premise behind trading is to find these key levels and then try to ask yourself, what is going on? What is the story, right? And you can analyze the story by looking at the structures, or you can use patterns, right? You can use continuation patterns, such as what we know as a drop-based drop, which we saw in SPY earlier this year, or we can look for a rally-based rally, which happened recently this year, right? You can look for reversal patterns. Reversal patterns are a little bit not as prominent, but sometimes you see a stock does a V-shaped reversal, a drop, a base, and then it reverses, it goes to the upside. Or you might see a rally, and then it sort of fizzles out, and then failure, reversal to the downside, right? You see, these are the patterns that matter the most. You have to look at the chart and see what would constitute these patterns and how would you execute them. And that's all we're doing as traders, is finding these levels so we can execute them and have the best risk reward as possible. Okay, so that being said, my voice is about to kick out. So I want to ask you guys this. Do you guys have any questions on anything at all? I know I'm talking very fast this time. A little too much caffeine this morning. So hopefully you guys kind of understood some of the concepts we discussed today. But AMD, you have to go over AMD. Yes, I did say we go over AMD. So this was something I wanted to talk to you guys about. The reason why I wanted to go over AMD is because this was a chart where, if you look at the chat, I actually brought this up. There was a point in time where I had a short bias on AMD, and I wanted to go short in AMD. And this happened around, it was early, not last week, but it was a week prior. I believe it was a week prior. If I can find it exactly. No, I can't find it. But the idea here is that AMD broke a very key level, right? AMD broke under 100. And this was a very key pivot. In my opinion, this was a very key pivot. And I saw us forming a lower low and a new lower low. So I knew at this point I wanted to look for shorts at 100 for puts for a move down. And eventually this sentiment shifted. And the reason why it shifted was because what ended up happening was that we ended up reclaiming this lower low. Obviously, we reclaimed that lower low and pushed a high of 96. We pushed to 96 and we sort of held that level. And then at this point, we started basing for too long. And when a stock starts basing for too long, right? When it starts to dump and then base for too long, either it has to dump then, or if it doesn't dump then, it's going to base and start to reclaim. And at this point, I knew that if AMD reclaimed 100, right, this key level, we would see a push back into 102.50, 105. And this was a break and retest we had taken on voice, was this level over 100. It was a beautiful trade. But why am I showing you guys this? I'm showing you guys this because levels matter more than anything. If you sit here and watch how a stock interacts with the key level, right, see that, okay, well, we are currently below 98 right now, below 100 right now. What are you going to look for? You're going to look to see how do we react with this 100 level, right? And you can see that we, after earnings, we kind of dumped a little bit in pre-market. We showed a little bit of strength going into the market open. You can see we had a little bit of strength. And as soon as market opened, we cleared that key level. And you can see there's absolutely no reason to be short AMD when it's breaking and retesting a very key level of resistance. And this was why we entered short on AMD here. Now, this could have been a completely different story. I could have gone short on AMD if it had started to form bearish pin bars or bearish wicks off my 100 level. I would have went short here with a stop of 100.1. And that would have been a beautiful trade to the downside if it presented itself that way. But the idea is that when you trade key levels, all we're doing is we're just watching price action, watching how it approaches, and watching how it breaks. And then we're executing and pulling the trigger when we have confirmation in either direction. In this case, we had confirmation when AMD broke above 100 on strong volume and a large range candle. So we went along an AMD when it broke above. But the idea here is that you guys now, at this point, after the last 53 minutes worth of time, hopefully have a better grasp of how to read how to chart these key levels and what to look for mechanics wise. And you also have an understanding of how to come in and approach the chart from a top-down analysis approach, meaning starting off in the daily, going to the 4-hour, going to the hourly, and then using that 15-minute time frame as your last time frame to make those adjustments and find those minor levels. I think that you guys now have a decent approach and a good understanding of how I look at the market. And in my opinion, that means I did a good job. So I'm going to end the lesson here, and I'm going to spend the next 4 or 5 minutes answering questions that you guys might have. There's over 500 you guys now in the Zoom, so there's a lot more of you guys than there were before. But if you guys have big questions, I'm going to try to answer as many as I can. I'm not going to be able to answer everything, but I'll answer some of them. Okay, guys, listen to this. The recording to today's session is going to be available, but it's only going to be available for a couple of days because last time I did this, somebody came in and posted it on YouTube and then posted it in some other Discords. So I'm gonna post it up for you guys for 3 days. So please try to watch it, and then I'm going to remove it. But please try to watch it in those 3 days or 4. I'll give you guys 4 days probably. So I'll post it probably tomorrow, and then by Friday it'll be removed. So please try to go over that before then. What indicators do I use? The indicators I use are VWAP, volume weighted average price, volume, and then moving averages. The moving averages I use the 100 SMA and 200 SMA. Those are the only ones I really use now. No, I'm not sick. I don't know why my voice is like this. I'm not sick at all. For some reason, I think I just talked too quickly. Indicators, it said I had 7 indicators. If you look at my indicators, you're going to see that almost all of them are just a variation of a moving average. So you have a volume weighted average price, that's VWAP. I have different moving averages here. Those are 3 different moving averages. And this is an EMA cloud. It's called HTT clouds. It's just clouds for just EMA clouds. And then this is a linear regression. Nothing special here. I don't really use this often, but it just helps you find channels and it helps you look to see kind of where we are within that channel. Right now, you can see we're extending to that top portion of this channel, and that is why it's likely for us to see a little bit of selling this week ahead of us because we're approaching the top part of the channel. Linear regressions, they're just cool to use. I mean, they're not. It's not something I use to trade. It's something I just use for like a larger analysis to gauge sentiment in the market. Um, Brett Dunn hit the Pablo Escobar. No, no, I did not. I promise you, I did not. I don't know. I don't know. A little too much caffeine this morning. How do you guys choose a stock before market open the day before? Jordan, all we're doing is we're looking to find stocks that are moving the most in the pre-market session or are moving the most in the previous day. Or they had some sort of earnings catalyst that I will look for. Right? So for example, AMD had an earnings catalyst on November 1st, right? Or around November, it was October 31st. And then on November 1st, we started trading it. And the reason why I started trading it was because they had earnings the day prior. Amazon was the same deal, right? Amazon, we traded this as soon as it had earnings on October 26th. On October 27th, we were trading it because it had that strong earnings catalyst on the day prior. So oftentimes when it comes to finding names to trade, we're looking for catalysts, either from a post-earnings setup or a post-news setup, or we're also looking for names that maybe are approaching a key level, like Microsoft. Microsoft approached a key level at 352. Well, if it breaks 352, it's very likely to have a very strong day that day ahead. So I'm going to watch it for a long entry. So we're finding stocks based upon post earnings, post news. We're also finding stocks that are approaching key levels that may break or may reject, that may be particularly strong that day. So that's what we're looking for. I'm still confused on the charting itself. I feel like I know what I'm looking for within the chart, but not exactly how to chart, if that makes sense. T-Fits, love you, man, but watch the recording of today's session. I think we kind of covered that. If you have questions after the fact, I recommend watching the recording and then pinging me if you have any questions. I think, in my opinion, the only way to learn is to watch something twice, especially when it comes to a session like this where I just talked 125 miles an hour. You have to watch it twice. Even if you watch it the first time, you're going to miss many things. And I recommend coming in, watching the recording again tomorrow or whenever you have time. And then I think that's going to kind of iron in a lot of things. It's kind of going to answer your own questions when it comes to charting. Then when you have those confusions, then come back, tag me in the chat, tag me or Mike or Rav or Felony. One of us will help you. So if you're confused, we're always here to help you. Just ping us after the fact. Exactly. Repetition is key. Like nobody, I can promise you this. Nobody's going to come in here day one, knows nothing about technical analysis, going to come into today's session and they're going to be a technical analysis master after 59-minute Zoom session. It's going to be impossible. Now I can promise you that the stuff that I told you guys today, this is like what's important. I learned technical analysis for 2.5 years learning, right? And I've been trading for about 6 years now. Everything I learned, I try to bundle together everything I learned and tell you guys everything I know in an hour session. And it's very difficult to do that. But that's why I think these sessions are valuable, because you can go in and you can watch Joe Schmo's technical analysis video on YouTube, right? And you can do that. And I'm sure it'll be helpful. But is Joe Schmo a profitable trader? Is he a profitable trader, or is he just somebody who sort of is just just another YouTuber that makes money off Rad Avenue, right? You guys have to understand that the only way to learn how to trade is to, one, watch from other profitable traders, and then don't expect to come after a 59-minute Zoom session to you're going to be an expert TA, right? You have to come in now and start to get your own view of the market and get chart your own stocks, right? Watch AMD, watch what it does, watch SPY, watch what it does to these key levels, and that is what's going to make you a better trader. It's not just watching videos or watching a Zoom session or watching YouTube, right? It's going to be a lot of times watching real charts and watching how they move. No, Josh is not a real trader. I was saying Joe Schmo, not a real trader. I wasn't attacking any real traders. I was just saying Joe Schmo. Not, I don't think there's any, unless there's a trader named Joe Schmo. I was not attacking Joe Schmo.